All right, Jeff Clavier, founder and managing partner at SoftTech, is one of the big names among the angel venture capitalists in Silicon Valley, providing startup funding for companies like Mint and Eventbrite and a whole lot more. Jeff, welcome to Bloomberg West.
Thank you so much.
How do you explain the type of investing that you do, really briefly?
So very early stage, we invest in consumer internet. We put in 250,000 to 750,000 as part of a syndicate of investors to help a company go from the initial product to its launch to the initial sort of set of milestones that will get it, off to a better world.
So you're looking at a PowerPoint presentation and a couple of smart guys, and usually guys, and writing them a check.
And a prototype. So an early version of the website that we can sort of look at and feel that there is something interesting being developed.
And you said consumer-facing internet, and it seems like that's the hot space. It sort of seems like that's always the hot space, that the things in the world of semiconductors and enterprise software, they might be much bigger companies, but initially they get sort of lower valuation rounds. Is that intentional?
So I think that capital efficiency and the fact that those companies could actually be built on a very, very small budget, $500,000, got a lot of investors like myself very excited 7 years ago now. And yes, now it's very, very popular. 7 years ago, it wasn't.
Jeff, I want to ask you about Groupon. We were just talking with Paul Kudrowski, who thinks Groupon is the biggest short opportunity in history. It's now being valued at $25 billion. Do you think it's worth it?
So it's so first and foremost, disclosure, I'm actually a Groupon shareholder. I sold them a company a while back, and I'm pretty happy about the news, but I don't have any sort of specific comment. I think Paul said it. The question is whether Groupon can get in the private market, this kind of valuation we hear, and then sustain it in the public market. If you look at their growth, scale, and revenue and footprint, I think it's definitely a very worthy company. As to whether it's 25 billion, we'll see what the market sort of says.
How about some other companies like Facebook and Twitter? We're also seeing sky-high valuations there. I mean, I think Facebook's valuation has hit upwards of $80 billion.
Which is basically half of Google, and certainly they don't have the revenue scale that Google has, but if you look at them as one of the main, if not number one, number two sort of websites on the internet, it's certainly a very, very valuable property, and people sort of anticipate that at some point Facebook's valuation is going to be much, much higher, and that's why they buy into it at this pretty aggressive valuation. If you look at Zynga, those guys have been ramping to north or south of $1 billion in revenue in less than 3 years, and so people sort of buy that velocity. I think it's pretty hot, but I'm not saying it's completely unjustified.
Do you look at the IPO as the exit strategy that it used to be traditionally in the venture business? As we were just talking with Paul Kudrowski, he's saying, look, the highest valuation might be the private round. The IPO might be what they used to call in Silicon Valley the down round, the dreaded down round. Why wait for the IPO? Why not get out now since you have that opportunity?
It's always it's a question that we ask ourselves every time we see an up round to the scale of the ones we're seeing now. I think that we are long-term investors. We've been in those businesses for 5-7 years, and if we think that there is still some more sort of juice in the stock on the public market, then we'll just stick around.
You've said that one of your biggest mistakes was missing out on LinkedIn. Tell me about that. They're about to file.
Yes, so in 2004, I had the opportunity to invest in LinkedIn, I think at 10 pre at that time. And, I didn't see the monetization. They were still small and not scaling like they are today. And so I made the foolish mistakes to pass. And if I could go back in time and change one investment decision, that would be the one.
I'm curious also when you make these decisions about what to keep and what to sell, if not everyone has to be so big. If you're looking for some companies that might be add-ons or features to other companies that can let you get out faster, quicker, and with a quicker bang for the buck.
At the end of the day, if you do the math of what it takes to do a fund, return it 4 times to your investors, it actually means that one or two...
Wait, sorry, what do you mean 4 times to investors?
I have a $15 million fund. That was
right.
My fund too. My objective is to return that 4 times, and so return 60 out of it. To do that, if you compound all your investments and returns and so on and so forth, it means that 1 or 2 of those exits have to be pretty radical, and that's why you sort of don't want to trade and for early exits some of those outcomes which could be actually very big in the public market. So it's an arbitrage, and maybe the arbitrage would be sell half, keep half.
But you also talk about how it's cheaper to get into these types of companies now than it used to be. But is the time period different? You want that 400% return or 300% return over your initial seed capital. Do you imagine that that'll take a longer or shorter period of time because you're investing in smaller chunks?
It really depends. I've had exits which were pretty substantial in a year and 10 days. Some of my companies have been around for 7 years, and the day they exit, they will provide, a 20, 30, 40x return. So it's all about figuring out, what is the potential left in the company based on the financing that they do and the potential exits that they will have, and decide whether you stay in or get out. And my position by default, being a long-term investor, is to stay in.
I want to ask you a quick question about Ustream. You're an investor in that. Just got a big boost from Charlie Sheen. How big of a boost did you get from his endorsement?
So, Ustream has been growing through leaps and bounds, supporting very big events such as the rescue of the Chilean miners. A lot of people actually using Ustream today to watch the news in Japan around the tsunami and the nuclear disaster. And yes, Charlie Sheen was big, but wasn't sort of the biggest thing that we've had.
Well, I hope that the tiger blood has been good for you, at least financially.
We've been winning.
Digestively. Thank you. All right. Jeff Clavier,
Thank you so much.
investor, SoftBank VC, really appreciate it. Thanks.